Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacy Burke from Stacy Burke Trading, and today we had PPI and unemployment numbers. Obviously quite a bit of movement and lots happening in the markets today. Gold was moving stronger. We posted a chart on the community YouTube page, and I asked traders, will it take out the overall high up in the 2,750 area? And as we can see, we have a large pump up year. This is a weekly chart. And then we had an inside year, which last year we broke the high, typical to our playbook setup of the inside day, and triggered longs on longer time frames, obviously strong gold bulls before trickling down for the majority of the year and taking out the low of that yearly low and then pulling back inside. And we have a breakout of the peak formation high in a strongly trending bull market at the moment, heading towards that 2075 area, 2075.00 area, the overall high that is on the chart. We have our opening range Monday, and we have a breakout, a parabolic breakout on Wednesday of our opening range. So we have day 1, day 2, Wednesday's day 3 going parabolic. We had our CPI numbers yesterday that gave a vertical move, which again we talked about yesterday on that trade. If we go to our 5-minute chart, we can see the vertical move go straight out. Now, a lot of traders did not like that. I thought this was in line with the overall trend, but a vertical move like this typically will be a stop hunt. And again, you can count these bars. This is a 5-minute chart, 1, 2, 3 engulfment. And I talked about this. This is similar to the trade setup that we've seen repeatedly, where the first hour goes vertical and locks a high in, and then the second hour either pushes back up into that high that is locked in the first hour for a vertical move at the New York Open. And this is a 5-minute chart again, but we'll just go back to our universal 5-minute entry criteria. This pin hammer, that after we've got our pushes down and an engulfment, we're in a 00 box. So again, we went 75 pips outside of the box, so took out the high of the week and also a previous day's high from the previous week. But just on our 5-minute chart, we can see this pin hammer coming back to the importance of timings right here, this engulfment pin hammer that closes back inside of our 20-minute EMA, after our engulfment at 00s. This is the New York Open right here, these two bars. And this pin hammer is our entry just on the normal universal shorting criteria for a vertical move of 100 pips straight back down to the low of the day. And that brings us to today. We have, again, a market that is making higher highs. So we have a market that going into the close of the U.S. session has taken out the lower high. And heading into the new day, we make higher highs. Now, I'm talking about the U.S. session here. We have PPI and unemployment numbers on the calendar, and again, you'll notice price is contained in a 50-pip box. We have a rectangle, and this is the typical setup for a trend trade. We've talked about this in previous parabolic setups. We have a breakout of a rectangle and then the consolidation near the high of the day, at or near the high of the day. Again, we're in a nice tight coil. We have major red news on the calendar. This market did not give a first bounce entry on our 1-minute charts. But coming back to our universal entry criteria, this is a parabolic trend trade coming out of the coil after major red news. We'll blow this up. Okay, we got a rectangle, a breakout, consolidation at the high of the day. We've seen this pattern before for the vertical move. 1-bar stop, again, tighter entry on a 1-minute chart. The pin is our new high of the day. And when the market coils sideways and goes vertical, We have our nice little break of the 100 pip box again. So again, we major round numbers. We're going from double zeros, 3 levels of rise. This market did 150 pips vertical on major red news. So again, a 1-bar stop because this is a coiled market. It should explode. There should be no two-sided auctioning process. And this market still has not come back. So this weekly target that we saw on our previous community post page could still be in line. We're 350 pips away from hitting that overall yearly high. So this is just a trend trade. So coming back to keeping things simple, when we have a market that's coiled sideways, it breaks out and goes sideways again. We're at the high of the day. This is no false break. We don't have anything to do until we have our news catalyst released. This market could have went vertical on news. It didn't do that. It broke out and pulled back. Okay, it pinned, coiled, and stayed sideways. The original thesis for the vertical trend trade is still intact. Now, we also posted about the Japanese yen being first red day yesterday after we had day one, pump day, inside day, false break, and then a vertical move on the news. That market then closed as a first red day. We have our coiled consolidation again, high bull, and the importance of recognizing the consolidation, because that's what gives us our thesis about having a nice tightly coiled market, a lower low in the London session for the pump up in 3 pushes. We'll zoom in on this. Again, we had major red news, 1 push, 2 push, 3 pushes. So on our 5-minute chart, we already have our entry. We already have our entry into this move, except we have major red news. This market gave a great first bounce entry into this trade on first red day thesis, and this market continued to move down for approximately 100 pips. And you'll notice again, major round numbers, double zeros to double zeros. First red day trade on the Japanese yen. So again, just reinforcing this template is an ideal, perfect first red day setup. And again, we don't know what's going to happen until we get into the timing window, and then the pattern for entry completes. West Texas spot crude. Also, again, we have our day 1, day 2, our opening range and initial balance. We have our little false break on Tuesday, and that forms our day 1 breakout long. Day 1, day 2, day 3, 3 pushes to the high of the day, but we get lower lows on the inside. Lower lows on the inside is the formula for the pump and dump. When we zoom in on this, we can see that in that first hour, right at the beginning of the second hour, they made a lower low. That market then pinned down before ratcheting up towards the high of the London session. And we readjust that because that now is our setup for traders who are looking for the day 3 shorts. The pump and dump, this is the 5-minute chart again, pump and dump for the short trade back down through the low of the day. And this will now close as a first red day, but obviously we've had our 3 pushes, day 3, high of day short trade. For traders who are looking for that optimal entry universal criteria, the 5-minute, obviously the EMA is going to be further down, which is a great reason when we get our entry to be looking at a smaller time frame. Same confirmation up high. We have our 50 pip box, and that market has now continued to drop late into the session. The euro has been trending strongly all week. If we just back up and have a quick look, again, go just back to process. Day 1, day 2, we have our opening range, initial balance. Day 1, day 2, day 3 breakouts today. So we have our first break of a high on Tuesday, day 2 on Wednesday, day 3 breakouts on Thursday. And coming back to our news and universal entry criteria, thesis is this market could continue to go long. Again, we have our news candle and a first bounce entry just on a 5-minute chart for a nice, easy 25 to 40 pip move vertically in line with the existing trend. Day 3 longs in the market yesterday on our pound yen. An excellent high of week, Perfect textbook triple top heading into our U.S. window just prior to the news. Again, we're at the high of the week. We have a nice triple top pattern within a pattern, as Peter Brandt calls it. So we have our little rectangle at the high of the week. And just prior to the news, we already have an entry heading into the news itself. But we had major red news. And on the initial entry, if traders obviously waiting for the news, after we have the news candle entry, we can position ourselves in that trade and still manage our risk with a 1-bar stop. This market is now should go vertical. Again, we are at the high of the week. We have our pattern within a pattern. We have a breakout, and we're targeting at least the minimum of the low of the day. But in a particular case where we have a pattern within a pattern, I will do a measured move as a potential profit target, high and low of that high rectangle, which we have now completed. But you'll also notice major round numbers. We have a 125 pip range targeting back into yesterday's U.S. session lows. High of the week, day 3 breakouts already in the market. Major red news. After the news candle, we can still get into this market with a 1-bar stop. Universal entry criteria is met. These are textbook, perfect playbook, best trade setups, traders. So again, the trend is your friend. And when we have our reversal setups, high week, these are textbook patterns. There's no subjectiveness. We have our criteria. We're waiting for the news. We have our entry. We can manage our risk. We can set a profit target in place. And even just using that rectangle itself gives traders a minimum of 100% expansion of that range. So hopefully you got value from today's video, traders. Keep it simple. Study the playbook. Again, just coming back to process. Opening range, Monday, forms our day 1 new week. Opening range, day 1 longs in the market. Day 2 longs in the market. Day 3 longs in the market. And then 1, 2, 3, 33 trade high of the week. Major red news, a vertical, no stress, easy trade setup. These are the types of trades that, again, coming back to gold, the Japanese yen, we can look at that trade. These trades are where you make your money on. We talked about this before, bread and butter trades. You can get your session scalps, 25 pips. Major red news prevented us from getting the full max out of this trade setup, even though we had our entry criteria. But that market could have easily wicked back through and then came down. We talk about this. Waiting for news is the safe trade. This still gave 30 pips roughly on a first bounce entry. But these other trades back and forth are session trades. When we get an opportunity to participate in a market that is potentially now going to give us a range expansion. Range expansion is a rectangle, 1 full 2 expansions of that range, targeting as our profit target. That is asymmetrical risk reward. Keep it simple, traders. 1% better every single day. And may the markets go with you.